We're getting into our next conversation now with Kiprono Kittony, who is the chair of the Nairobi Securities Exchange, and we'll be talking about bull runs and bear runs. What's that? What's a bull and a bear? Big words we hear, but let's talk about them. And of course, what is happening at the NSE. But before that, let's welcome him with a quote from Jano. Karibu Kiprono.
Thank you very much. Really wonderful to be here. It's been a couple of years.
Oh, wow.
It's been a couple of years.
Yes.
We're pulling out of retirement.
The last time I was here was when I was leaving the chamber, maybe in 2020 or something like that.
Okay, okay. And you just said that Hosea, sorry, not Henry.
Yeah.
Hosea was your roommate in university?
Yes, indeed.
Wow. Yep.
Yes, so we worked together, and he's the one who he nominated me to join the board of the NSE. So we worked together. He's also the chair of the Pack Hunters Club, which brings together all the stakeholders in the capital markets ecosystem. Yes.
Fantastic.
Yes.
I think that that room, amazing.
Yeah.
10 over 10.
When they say your network is your net worth, they were not joking. It's like they foreshadowed it.
Yes.
But today's quote is by Ellen Johnson Sirleaf, the first African female head of state. And she said, "The size of your dreams must always exceed your current capacity to achieve them." Now, she said this back in 2011. She was given a Nobel Peace Prize lecture. Ellen Sirleaf has always been big on, if you're dreaming it, you shouldn't, sell yourself short. So again, just want to get your reactions on the quote. The size of your dreams must always exceed your current capacity to achieve them. Does that ring true for you?
Absolutely.
Yeah.
Absolutely. And I'm a great believer that, you reach for the sun, and at the best you'll get to the moon. But if you aim for Ngong Hills, then you'll probably end up in Kitengela.
Wow. Ngong Hills was just chilling.
I know, it's like
Landmark just saying, I'm here.
looking beautiful. Looking my windmills.
Oh, my.
Go big or go home.
Yep.
Absolutely.
This is it.
Yeah,
Go big or go home.
I remember in 1999 when Vodafone was making up its bid for Telkom Kenya to take over the asset, which is today Safaricom. I remember the business plan, I think, said that Kenya had a potential of 150,000 mobile phone subscribers.
Wow.
And Vodafone knew otherwise. And today I think we're at 30 million and counting.
50. They just
50 million, I
announced.
think.
Yeah, just one, or just Safaricom alone said it has 50 million subscribers. Now you can imagine, and then there's others who are operating in the country. So it's go big or go home.
Yeah.
The Nairobi Securities Exchange, in the Kibaki years, people knew the stock exchange because there were IPOs. Kidogo, there's Kenyan IPO, there's Safaricom IPO, there's Bumia's IPO, and everybody was just saying, and it was down here in this building.
Yeah. You're like, are you in the Wolf of Wall Street? What's happening?
Everybody's just talking about buying shares.
Yeah.
People were taking loans to buy shares.
Yes.
And then since then, you moved out of here, you went to Westlands, but then renamed to Nairobi Securities Exchange. And so then people have just been talking about, okay, so what's happening in the NSE? Many people, especially the younger generation, there are many who have not engaged with the Nairobi Securities Exchange. So introduce it to them. What is NSE?
Let me start at the beginning. Let me give you just a brief profile of myself. I left university in 1988. I only got employed for 2 years, and I've been doing business since. I've dabbled in many enterprises, and at the university, I got involved in student leadership through the ISEC program. And I think from
ISEC has been around a lot. I'm sorry, I just had ISEC has been around since the 80s. Okay, but please continue.
Yes. I was very, very instrumental in the early leadership of ISEC. And we took ISEC to many universities. We took it to KU, we took it to Baraton, we took it literally across the country. And I was a national exchange controller. And since my very early days, I've been involved in business leadership. And I got fascinated with the Chamber of Commerce and, the good work that we did there. When I finished on that assignment, I thought I was going to go into quiet retirement and run my own enterprise. And then I got invited to join the board of the stock exchange. So I joined the board, and immediately I joined the board. I think a year later, COVID happened. So we were all working virtually. We were at home. And you know what happened for 2 years? We were literally, the whole world was at a standstill. And in the middle of COVID, at a board meeting, I didn't know that it was the end of term for my predecessor. And, on a virtual call, I was asked to chair the board of the NSE. And obviously it was a huge, it was a big surprise for me. I took on the challenge. And at that time, the market was at an all-time low because we didn't have a lot of government support. We didn't have any partnerships. The indices were low. Trading flows were quite, subdued. And we then took the challenge head on. My CEO was Jeff Odundo, who is the current CEO of NMG. Today, an incredible business executive in his own right. And we have since been able to turn the fortunes of the NSE. If you look at the indices today, literally all the indices, the all-share index is at over 3,500. The 20-share index, the 5-share index are all in positive territory. And it's not accidental. It is as a result of deliberate actions that we have taken, things that we have done to broaden and deepen the markets. One of the things, one of the challenges
just before you continue, Kiprono, give an overview of what happens at the Nairobi Securities Exchange. You see, it's still that your brain still goes to
stock.
Yes, just give an overview.
Okay.
For people who may be new to the world of securities.
Basically, the Nairobi Securities Exchange is a trading platform. It's an electronic trading platform where shares of companies are traded. That is the equity side. And we have a total of 62 listed companies, the largest being Safaricom, which occupies over 40% of our total market capitalization. We have companies in many industries. We've got companies in agriculture, we've got companies in the financial sector, we've got companies in industry, in manufacturing. And then there's also the bond market. The bond market is the marketplace where the government raises funds to meet its recurrent cost expenditures. Companies also raise funds. We've got the green bonds, like the Aecon Green Bond. We've got many corporate bonds that are listed on the exchange today. The NSE also has an Ibuka program, that is an incubation program for small and medium-sized enterprises that are aspiring to list in the future. So what we do is that we help them, taking them through the motions, improving their governance, creating board structures, and creating a roadmap towards being able to list their shares. So access to the market is through investment bankers. So through an investment bank, you open a CDS account, and then you have access to the market, and you're able to trade on the markets.
Right.
And I think that explains it in a nutshell. And in Africa, I think we're the 5th largest exchange. We belong to the global community of exchanges. I mean, we are part of the ASER, which is the African Stock Exchanges Association. And 3 years ago, we were nominated, under Jeff Odundo, we were nominated as the most innovative exchange in Africa. Because every year we're coming up with new products. I think you saw recently the Lindsay Finco that was listed through, and actually the head of state came into the exchange 2 weeks ago, and he listed the exchange, and we've been able to raise money even for critical government infrastructure, like now we are supporting the government, raising funds for the Talanta Stadium. We've also been able to raise funds for government to build military houses. So in a nutshell, that's what we do.
Who invests?
Investors are a wide range. We've got about 50% of the total market participation is foreign investors, high net worth individuals, savvy investors from New York, London, and other parts of the world. We have local high net worth individuals. We have local retail investors. And basically anybody has a chance to invest. All you need to do is open a CDS account, and you have access to the market. Yeah.
You just said top 5. You mentioned top 5 in Africa?
In Africa.
In Africa. Is there a rating system?
There isn't a rating system. It is the markets are. Exchanges are assessed by the value of their capitalization. The largest exchange in Africa is the JSE, Johannesburg Stock Exchange, which has over 300 companies, and I think it's about $50 billion in total market cap. So the JSE is the biggest, followed by, I think, Lagos, Morocco. I forgot the 4th one, but we are 5th in Africa. With a market capitalization of 2.5 trillion. Yeah.
Is there usually a sense of, hey, we want to be the 3rd, we want to be the 2nd? Is that usually a motivation, or are there other factors that inspire or motivate how you grow as a securities exchange?
You see, that is also dependent largely on the size of the economy that you're operating. As they say, the stock exchange is a bellwether. It's a window and an indicator of economic performance in a country. So in this region, I think we are quite happy as the NSE to be the largest exchange in the region. We are certainly looked at as a focal point for investing in the East African region. Yeah, I mean, in terms of whether we aspire to be bigger, of course, through the initiatives that we are taking, I'm sure that in near foreseeable future, you'll see a significant rise. As you can see, as I said in the beginning, the NSE today is really on the rise. It's on the upswing. And I really would like to say that we've received a lot of support from the government. They've come in and they've come up with all sorts of initiatives. They're working in collaboration with us to see how we can revitalize it. We are focusing on seeing how we can bring in retail investors, the common man. You see, Kenya is a very unique economy because 30% of our GDP is transacted on M-Pesa. I'm a Safaricom dealer, and in fact, this morning I'm missing a big Safaricom dealership meeting that's being addressed by Peter Ndegwa. I was in the Grand Regency Hotel in 2007 when M-Pesa was launched. And we in the dealership fraternity, we were very, very unhappy, very skeptical, and we said, well, what the hell are they asking us to do? We're busy selling SIM cards.
Trying to sell SIM cards.
And selling airtime. I mean, why are they now burdening us with this M-Pesa story? And look, what happened? That innovation today has captured the imagination of not just Africa, but the world. It is a case study in Harvard, it's a case study in Stanford, and many other places. So similarly, I mean, we would like to see that the exchange today is accessible to the man at the bottom of the pyramid. We would like to see that we deal not just with the demand side, but also the supply side. The demand side is very robust. In fact, we've been on roadshows in many parts of the world. We're in London a few months ago, and we met with the owners of global capital. And many of them complain. They say, you guys, yeah, your performance is good, but then you're too shallow. So one of the focuses that we have as the NSE today is to deepen and to broaden the market, to have more products for global investors to be able to put in, as well as for local investors. And from the 8th of August of this year, that is next week, we will be able to buy one share. You know, the rules have always been that you can only buy 100 shares. So, for example, if Safaricom is retailing at 25 bob, the minimum you could participate in is 2,500 bob. But for Mama Boga, or for that trader here in Karioko Light Industries, maybe he just wants to buy 2 shares.
Oh no, not Karioko Light. That's counterfeit. That's counterfeit.
No, Kariobangi is real.
Or Kariobangi.
Yeah.
Kariobangi real light industry.
I mean, that was just...
It was just an example. You went literal. No.
I went literal. I panicked for a second.
No. We'll come back to learning more about how people can participate. But in the beginning, when we were introducing this segment, we were talking about bears and bulls and bourse. So then the other day, somebody said Nairobi Securities Exchange is having a bear. Is it a bear run or right now? It's a bear.
Bull.
It's a bull because there's optimism, right?
Is a little bit of optimism, yes.
What are those terms?
Exactly. So that's what I wanted to come back and be like.
What's a bull? What's a bear?
Okay.
Who is who?
You know, markets ebb and markets flow. I mean, imagine you're sitting by the side of the shore in Diani, and what happens with the waves? They ebb and they flow. So a bear run is when the market is flowing. I'm sorry, a bull run is when the market is flowing. A bear run is when the market is ebbing. So a bull run is when you see a rise in performance, you increase in shareholder value. This could be by a multiple of factors. You will see better dividends flow from companies. You will see greater market confidence. You will see more participation in investing activities, and generally a positive outcome from the activities of the exchange. A bear run is the exact opposite. A bear run is when there's negative valuations of companies, slower dividend outflows, shareholders getting lower return, owners of capital seeing a reduction in the net worth of their assets. I can tell you, for example, when about a year and a half ago, total market capitalization in Kenya was less than 1.4 trillion shillings. Today, we are close to 3 trillion Kenya shillings. So people who invested, and this one just, if I was to break it down to you, a person who invested 100 shillings 2 years ago would today have close to 200 shillings. So that's basically the difference between a bear and a bull. And so basically all investors look forward to bull runs. And if you visit any exchange, if you go to London Stock Exchange, you go to New York, at the very front of the exchange, you will see a huge roaring bull. So that's what we aspire. There's no exchange on earth that has a bear in the front.
I mean,
it's looking for the positive. But then, this, as you say, it's just like what we say. It's the tide coming in and the tide going out, and this happens daily. Now, somebody who's investing in the stock exchange is just thinking, okay, now I need to know when to time to time when it's going out so that I can put in, and then when it comes in, so that I can, cash in on it. But it sounds just so complicated for, just an ordinary person to think, when I invest in the stock exchange, when is the right time to come in? When's the right time to come out? Should I think just short term? Should I think medium term? There are people who say, invest for the long term. What's long? Yes. Is long 5 years? Is long 50 years?
Yes. That's a very, very good question. And I'll just try and break it down to as simple as possible. Number one is I would always encourage people to invest for the long haul. And if you look at the generation of our grandparents and our parents, they always invested in stocks almost like a savings account. And I know, like, for example, my late father had shares, certificates in his briefcase. And when he passed on, we had to go and sort of like formalize the process of transferring those shares. You see, that generation of people bought shares as a way of saving for a rainy day. But then over time, what we're trying to do is to demystify and to change that perspective so that people can invest in the long haul, to trade, buy when it's low, sell when it's high. Of course, for somebody who's got very low resources, that might not be a motivation. But then you see, great economies are always built on a savings culture. And I'm sure Dr. Kelly talked to you about the pension industry. And the pension industry is a fundamental pillar on financial and economic success of any country. If you look at the leading economies of the world, the United States, Japan, China, Korea, and the tigers of Southeast Asia, their growth and success has been always underpinned by a savings culture. So even those who buy stocks to save, it's still not a bad idea. But what we would like to see as the people behind the exchange is people developing a trading culture. People having the confidence to see it as an alternative way to participate in economic activity. We would like to see a mechanic in a Juakali place collecting 1,000 shillings a day, committing to putting 100 shillings into the exchange, buying when it's low and selling when it's high. Once we develop that culture, then you will see market activity and people being able to realize arbitrage or profits from the trading of shares in the exchange.
Right.
One of the things also is, you see, I don't want to just focus on equities. We have other investable options, like, for example, the bond market. So in the bond markets, you see right now, if you buy a bond, for example, a government infrastructure bond, yielding a return of about 16.5 or 17%, last year even up to 18%, you see, if you buy that, it definitely gives you a higher yield than, for example, getting a fixed deposit account in a bank. So you see, we want to see participation, we want to see trading activity, we want to see that we can give people enough civic education. So we're working together with the Capital Markets Authority so we can go around the country and really talk to people, particularly even before these IPOs that we have coming up later this year, like Kenya Pipeline and the rest. So we want to see the general public being savvy enough and financially literate enough to be able to take advantage of the opportunities in the exchange.
Right. But I mean, the world over, securities exchange is thought of as not for the ordinary person. I don't know if that would be any different here. I'm also thinking about the information that would be required for someone to make informed decisions on securities, right? The amount of time that would be required to research, or the amount of resource that would be needed to delegate that to someone. So let's practically make it like accessible for people. Like, how do we make it? Because it requires time, it requires information, it requires resource.
I think for me, what I would say is we have 18 investment banks. You see, all trading today has to be done through investment banks. We have companies like VIDA, we have companies like EFG Hermes, SIB, etc. So all these investment bankers have a responsibility of actually disseminating information to the general public in terms of how best they can participate in the market activity. And I'm sure over the last year you've seen that there has been a concerted effort by the stakeholders in the capital market ecosystem. The CDSE Corporation, for example, where I sit as a board member, has been on a campaign to get people to open CDS accounts. We have been running active campaigns to get as many people to be able to participate in market activity. Working also with the Capital Markets Authority and through the support of even other global agencies like the FSD, for the Financial Services Deepening Initiative, we've been able to go out there and inform the public of how they can participate. This is a very exciting year. I'm sure you've seen the listings. We've had 3 listings the last 1 month. We have Kenya Pipeline coming. We have further sell down of Safaricom shares that the government is considering. There's a sale of small counters that are taking place. So there's so many things happening. For example, when we listed the Acorn Green Bond, which was the first, I think it was the second green bond in the whole continent of Africa, which was cross-listed in Nairobi and London, people were skeptical. But then I think you saw the results that Acorn produced 2 weeks ago. In very, very impressive dividend outflows that have come out.
Let me take you just a little bit further back.
Yes.
I can now buy 1 share on the Nairobi Securities Exchange.
From the 8th of August.
From the 8th of August,
Yes.
okay, yes, in 3 days.
Yes.
How do I buy 100 shares, 1,000 shares with my little savings? Literally, let's walk through. As just a person who has heard of securities but has never traded them, does not have an investment bank that they're affiliated to, is just looking to make a saving, make an investment, a little something for the future.
Very good question. The journey is quite simple. It's a 7-step journey. The first step is to identify a licensed broker. And there are 18 licensed brokers. You can find them on the NSC or on the CMA website. The second thing to do is to open a CDS account. You have to fill out a Central Depository and Settlement Corporation account. And that is quite simple. You do that through your broker. All you need to do that is have an ID, a KRA PIN, and a passport size photo. The third thing you'll do is to fund your account. So if you have 500 bob, you will fund that account at the CDSC.
That is deposit money.
Yes, you will deposit money. Then you'll consult your investment banker to help you identify what your aspiration is. Yeah, some people are interested in investments in agriculture. Their accountants like Sassini, Kakuzi, and etc. Some are interested in Safaricom for whatever reason. If you're agnostic, they will also be able to advise you which would be the best equity to put your money in. Then once you've identified and given them the go-ahead, they will invest. And your CDS account then will reflect your ownership of that equity.
Right.
What we would like to encourage people to do is then to start to trade. For example, if you bought Safaricom at 14 shillings this time last year, and it's at 25 bob now, I would encourage you to sell and go to another counter. So get the benefit of your profits and trade in another counter, because you might find then that another counter, maybe Cooperative Bank or Equity Bank, would be trading at a slightly lower price, and there is an upswing, or there are activities that corporate is engaged in that will give a better return. Then we encourage people to monitor their investments. Once you have your CDS account, using your phone, you'll be able to see the performance on a daily basis. And at whatever time you want, one of the biggest advantages of the exchange is that when you're ready, if you have challenges and you need to liquidate your account, it's just an order that you give to your broker, investment banker. They'll sell your shares and credit your bank account or send you the money by M-Pesa. It's as simple as that.
We're going into a break. This is the most inclusive conversation on NSC that I've heard. You know what I mean? Because to your point, it does seem that it's, reserved
Exclusion,
for... It's very exclusionary.
High net worth individuals.
That's how he started.
Who deal with... But then the retail investors...
50%
is high net
But it
worth
seems as a
individuals.
concerted effort to just make it more accessible.
You mentioned the Kibaki regime. President Kibaki was very committed to the market. And I think in the history of Kenya, we've had 4 presidents. And I don't think there's been any greater momentum in the exchange since the Kibaki regime than we have had today. Our head of state has come to the exchange 3 times. And on his first visit, which was less than a month after he was voted in, he challenged us to do something for the bottom of the pyramid. That's exactly what we're doing.
So we'll come back after the break and just debunk it a little bit more, because I think that's important. I'm also interested to hear what NSC is doing, because there's been public anger over public debt. I don't know whether that's pushed investors away. It doesn't seem like it scared them. But how do you kind of straddle that balance? But we're with the chairman of the Nairobi Securities Exchange, Kiprono Kittony. If you have any questions, send them in. It's coming up to 9 a.m. Fixing the Nation, one conversation at a time. Back in a bit.
And I want to link that to a question actually just from Julian Zamboko. And you mentioned, Lindsay, when you were talking about some of what's happening at the NSC. And he's asking why this would happen, why a private bond, for example, Lizzie Finco, which is now the Talanta Sports Complex, would have tax-free interest income as opposed to just floating a bond, an infrastructure bond?
You see, that is really on the architecture of the bond itself. For example, the Lindsay bond is actually designed to support government finance its infrastructure. As you know, that we are, as a country, our debt to GDP has hit its ceiling, and the government of Kenya is very hard pressed to access global funding from the global multilateral agencies like the World Bank and the IMF. And the traditional lenders as well would, when you get to your debt to GDP ratio, you have all sorts of challenges. What the NSC did is we committed to support government to raise funds to meet its to get off-balance sheet funds that will help them to realize developmental needs of Kenya. Like, for example,
Like
the last Lindsay bond is designed to raise funds for 54 billion to finalize the Talanta stadiums. That Talanta stadium, you know, is a key sporting infrastructure that could also attract global sporting activities and events. So the interest free is very similar to what happens to the government on the infrastructure bonds. You see, that's a way of attracting people to bring their capital in. So if you know that people have, not interest-free, tax-free.
Yes.
Tax-free is a way of encouraging investors to bring their money in.
Yes.
For example, if you look at the infrastructure bonds.
Then why not
just
the
exactly.
infrastructure
Because you see,
bond?
that way you de-risk your own investment. And as you know, right now we're in a very highly taxed regime. Actually, Kenya is one of the countries that are rated as having the highest tax regime. So when you float an instrument that has no tax on it, obviously you'll attract more people. And it's an off-balance sheet way in which we are supporting government to realize its developmental needs.
All right.
Okay, let's get a bit
What
more.
does that mean? Just a bit more on the Lindsay Finco. Because it was floated, investors came in and then came to the market.
Yes.
Why? What's that route?
No. It was listed before
listed.
it went to the public. It cannot go to the market before it is listed. Yeah, there is a process that is stewarded by the Capital Markets Authority.
Right.
You cannot take a bond to market through the exchange before it goes through the approval of the CMA. Yeah.
So this is what happened.
Yeah, and there's also, through the CMA, there's an investor safeguards. There are safeguards to investors. Yeah, that's why you can ensure that you don't lose your money, because then they'll ensure that the governance that is required to safeguard people's investments are in place.
Now that it's in the market, can ordinary investors participate in it?
And why not? You can today. If you have a CDS account, you can place your bets. You can place your investment today.
Okay, and this will be somebody who will be selling it in the secondary market because it's already
investment
subscribed.
banker. If it's already oversubscribed, you buy it in the secondary market through your investment banker.
Okay. Oversubscribed again.
Yeah.
Because a lot of our listeners and watchers are new to this, so it means that already whatever amount that Lindsay Finco wanted to raise has been raised and above.
It is. You see that it is unitized. So there's a unit value for every bond that you buy within the Lindsay Finco bonds ecosystem. So when it reaches its ceiling and it's fully subscribed, the only way you can then participate is through the secondary market, and people are selling.
Okay.
Let's sample some feedback in just a bit because we may not get a chance to. So I'm just going to read some comments and questions, Kiprono, that you can react to or respond to.
Yeah.
Moses Juguna says, please ask him what happens to ARM Cement shareholders who can't trade the shares due to suspension, and National Cement only bought the assets. I've had to carry that investment at zero. So just take note of that. Delmas Mutwiri says, lots of suspensions, companies going down. We fear investing again. You can speak to that as well. Skip Keme, Diego says that you gave NSC a new lease of life. In fact, somebody else here is also saying you should be Minister of Trade.
Same guy.
Same guy. Then I used to trade some time ago, and we were getting frustrated when I would give a sell order. The instructions would be actioned 3 days later, making losses as some shares can be very volatile. So just speak to some of those.
Oh, wow. Okay.
Okay.
Given
That's
an
a great
order.
place to start. I also have like 3 other questions. But anza na hizo alafu tutaenda.
All right. First of all, on ARM, there are investor safeguards provided by the Capital Markets Authority. And I cannot say today whether or not that they will be able to realize a return, any of their value through that investment. In fact, historically, one of the challenges we've also had is in corporate bonds. You remember there was Southern Credits.
Yep.
There was a bond that was for Nacomat that investors lost their money. And since then, the NSE, in consultation and collaboration with the Capital Markets Authority, have come up with much stricter guidelines in terms of ensuring that there is sufficient liquidity on any asset on the exchange. It is not unique to Kenya that you find companies faltering even though they're listed. However, I want to emphasize that companies that are listed operate on much higher standards of corporate governance because they are transparent, they are open, and they are subjected to a lot of scrutiny from all angles. As an exchange, we are also a quasi-regulatory agency. So it's also, we have a committee in the exchange that looks at the health of companies, and we monitor companies that are not doing well on a continuing basis. But however, that does not in and of itself guarantee that there's no chance of failure. All we try to do to the best we can is to ensure that we minimize the chances of failure, corporate failure. And we also work with the corporates that are faced with significant financial challenges, as we did say with KQ. And you've seen the remarkable turnaround that Kenya Airways has been able to experience. You've seen the remarkable turnaround. A few years ago, the value of a share in Kenya Pipeline had gone down to 4 shillings. Kenya Power Lighting Company had gone down to 4 shillings. Look at what's happened to Kenya Power today. The story speaks for itself. The message that I am basically giving is that I am not saying that the market is risk-free. However, you can mitigate your risks by working closely with your investment banker who have a lot of research on these entities.
Right.
With regard to suspensions, when an equity or when a company's performance gets to a point where it is exposing investors to much greater risk than they deserve, then the CMA, who are the ultimate regulator, will then raise a red flag and suspend that equity from trading, as it did say with KQ a few years ago when they were doing extremely badly. And the reason for doing that is further investment of that is only risking the investors. But then, however, those who are in will only be mitigated through the actions and the procedures that are provided by the ultimate regulator, who is the Capital Markets Authority. So market volatility is not unique. It is not new. It happens globally. And the best we do is to mitigate the risks for investors.
And do you think you talked about volatility. I'm always curious about that. The last year has been a bit volatile in the country. For example, how do you still sustain that investor confidence, or even now inviting even just Kenyans to be part of it, despite that, despite people feeling like, number one, is the fiscal policy hurting or helping the market? Number two, this volatility, I don't know to what end. What would you say to somebody like that who's listening right now and saying, I don't know if I want to partake in this. Volatility, I know, is unpredictable, but how do you speak to that?
You know, one of the fundamental rules of economics is higher risk, higher return. And, I don't mean to say that we are a high-risk country or a high-risk exchange, but Kenya's democratic credentials speak for itself. I think you just need to travel around the country, the continent, or around the globe to appreciate how far we've gone democratically. I've had the unique privilege of traveling to over 90 countries, and I can tell you for free, democratically, we are far ahead. We are one of the few countries in the world where people can say anything to anybody in leadership. You can take them on. I mean, of course, we've seen the last year quite a bit of upheaval. But it's not lost to me also that the current regime inherited a huge amount of public debt. And that public debt, in and of itself, requires that they take measures to increase their tax collections to a point, and also raise money through the exchange and other means to be able to service both their recurrent and their long-term debt obligations. What that does is that it does 3 things. One is that it crowds out the private sector. You see, when, like, for example, when the infrastructure bonds were trading at 18%, if you were the owner of Equity Bank or the owner of Cooperative Bank or ABSA, would you rather risk lending your money to an SME, or would you give it to the government through the exchange, through a bond, at 18%, tax-free, risk-free?
Yeah.
So you see, one, you crowd out the private sector. When you crowd out credit to the private sector, then it makes it difficult for employment. It makes enterprise challenging. And then that also speaks to the question of unemployment. And that unemployment then speaks to the question of social upheaval. So what you saw, like the outpouring of the Gen Zs and et cetera, was because of real frustration to the ground in terms of economic activity that is taking place. So, you know, in terms of the political risk, I think notwithstanding that, we've seen a lot of inflows of foreign capital. We've seen a lot of internal local confidence. I mean, if you see the bonds oversubscribed, share trading oversubscribed, market indices up, share flows up, wealth creation up. So, and if you look at the fundamentals of the country today, I mean, the government's addressing the long-term debt issue, and we've been speaking with them, especially regarding this IPOs that are coming. One of the things that we really want to see government do is to ring-fence that money to meet pending bills. You know, I know that the last time that we...
specifically?
Not Safaricom specifically. You know, there's quite a number of initiatives going on. There's the Kenya Pipeline IPO. We are hoping that they'll do a further sell-down of Safaricom. So the government of Kenya also owns quite a lot of equity in small counters, not very big counters like Kenya, like in the NSE itself, in the Kenya, through the ICDC, which is now called the Kenya Development Corporation. So, and you saw last week that they've also announced, they gave a list of 9 companies that they're going to be selling in the near term. But you see, if that money could be ring-fenced to service pending bills, which I think are close to 700 billion. If the government, say, for example, is able to raise up to 200 or 250 billion from these initiatives, that will service 1/3 of pending bills. Servicing 1/3 of pending bills will do 4 things. One, at least 20 to 30% of that money will go back to government as taxes. 2, it'll reduce non-performing loans in banks. When it reduces non-performing loans in banks, it'll give the banks confidence to give money back to the private sector through loans. That in and of itself will spur economic activity, increase unemployment. If you look at increase employment. 3, it'll create a feel-good factor because so many homes have been broken, so many enterprises have been destroyed, simply because of the unpaid debt situation. So you'll find somebody who cannot send his children to school, but is owed by a county government 20 million.
Right.
So he can't go to the government he can't go to that school and say, fine, I have owed 20 million, but that 100K I owe you, let's trade it off. There's no such mechanism. So for me, I'd like to say that we are going through an incredibly difficult season as a country. But it is necessary in the sense that it is what we need to do to get to the shore, the new horizon where we might see better fundamental outcomes. Other things that are in the macroeconomy that are speaking positively to our economy, number one is our inflation regime is quite good. Food inflation is very low. I mean, general inflation is quite low. Less than 5%. We've had very good rainfall for 3 or 4 years. I'm a farmer.
True.
So there's no hunger in the country. Number 3, they're working hard on the debt situation. So I would say that the social upheaval is a consequence of the challenges that we are facing. But speaking as an insider,
things are getting better.
Things are looking up.
I want to ask a question. Sorry, Maria. You know, everybody else appears to be seeing the positives. You know, just by looking at, you know, the activity in the Securities Exchange and everything that you've said. At what point does that then translate to everybody else, the citizen? Because the macros, and that's a conversation that keeps happening. You know, the macros are looking good. I mean, look, inflation rate has come down. Look at the interest rate is coming down. The CBK is managing. We have, you know, forex reserves and export window and ratio and whatever. But then people are still not feeling it. So for people to participate as traders in the NSE, they ought to be having money to be able to trade with. How long do you give it?
That's a very, very good question. And I don't think that requires a show on its own. And I guess with more experts than myself. But I would like to say that to me, there's 3 or 4 things that are imperative in order for us to actually realize long-term developmental activity. Firstly, as you know, and nobody's thinking about it, Vision 2030 lapses in 5 years. We're in 2025.
Yep.
And I challenge the leadership, and as I speak, I meet them often. I tell them that actually the greatest challenge that anybody who takes power in 2027 will have. That is, if the current government is able to convince the citizenry, or if any other parties take the power. I mean, the thing is, the first thing is we must deal with the unemployment crisis. I mean, Kenya as a country, we have a significant population of people outside of employment. That creates a real time bomb in terms of the social, economic dynamics of a country. I mean, when we have 1 million people going into the job market every year without being absorbed, then that's 1 million people who are a potential problem to you. But however, the flip side of it, it's 1 million new consumers if they're gainfully employed. So we need to find a new vision that identifies a way that these people can be absorbed into gainful employment. I think the second thing for me is that we need to move into an era of rapid industrialization. Without rapid industrialization, then the foreign exchange reserves that this country has, and I must give credit to this regime because our foreign exchange reserves are at an all-time high through multiple initiatives that they have conducted, and as well as the burgeoning diaspora community that we have, who send in a huge amount of money into this country every year. Another third thing is that we need to galvanize our resources, both human resources and our natural resources, to the greatest benefit to this country. And by that I mean, you know, Kenya today has 2 gigabytes of energy. We have, I think, 1,950 megawatts of power. And if you look at the peak, like the night consumption of energy, it is indicative of a country that is not industrialized. Because you see, we need to be consuming our power on a 24-hour cycle, you know, effectively and absorbing all of it. But in Kenya now, at night, when people go to bed, our consumption is not non-existent. But in an industrialized economy, like in the tigers of Southeast Asia, that's probably the peak, because that's when people are working in industry. So we need to figure out ways of extracting our natural resources and being able to deal with our balance of payments and our balance of trade situation. And the fourth thing that I think is an absolute must is, and you know, I have spoken about this many times publicly, I don't think that we have taken our agricultural agenda seriously. Because Kenya is a country with a huge agricultural potential. It has got water resources that we can use to the advantage of this country through fishery, through even tourism. If you look at even our tourism infrastructure, if you go to the coast today, it's and you travel globally, we are joking. I mean, Mombasa doesn't have any. Have you ever asked yourself, from Lamu to Shimoni, we don't have a branded hotel, even one? Have you ever seen a Marriott in Malindi? Have you seen a Hilton in Mombasa?
There's one in the Mara now, but okay.
Well, but you
fair
see,
enough.
But
Yeah,
yeah,
it's
I
one.
think we do more.
So
Right,
what I'm speaking to is the fact that we do have the resources,
We're not.
but we are not yet extracting
Fair.
the value that we need.
That's fair. Okay, I have a couple questions. Let me start with, I'm a young person thinking through investment opportunities. Why should I go to the NSC, for example, as opposed to putting my money in crypto? I've got a friend who tells me Forex is it for him, just bought a brand new Mercedes the other day, and I'm like, okay, maybe I should go into Forex too, or crypto. And I'm not equating the two in terms of like danger or risk, but I'm just saying multiple investment vehicles available.
Now, let me demystify that question. Huh? And as a young person, the first thing you must be scared of is the fact that there is the advent of artificial intelligence. Many of the tasks that you're currently doing as young people might be taken over through AI. Do you know that?
Fair.
So you see, we're in a world where the capability, and I think Bill Gates spoke to it last week, the capability of artificial intelligence to take up the current assignments that people are doing in their workplace could be taken up through advanced robotics, through AI, through multiple other new things that are happening. So the two examples that you cited, one, why can't you get into Forex trading, or why can't you indulge in crypto? I'm a great believer that as a country, we must start to embrace digital assets, including crypto. We need to understand it, we need to demystify it, we need to embrace it. Right? Obviously, there are attendant risks to it. But then burying our head in the hole, like the proverbial camel, is not the solution. We must unpack that. The book that I'm reading right now is called The Bitcoin Standard, and it speaks about Bitcoin and the history of Bitcoin. I as an individual, I'm interested to learn more about crypto, about digital assets. And I don't see why the exchange in the near term cannot be the place where you trade crypto. So, to your question, instead of going outside, you can better come to a safer place where it's regulated and trade it.
Fantastic.
So at the point, it might not happen during my leadership, but then I hope that that would happen.
Happens, yeah.
Now, regarding Forex bureaus, again,
Forex trading.
Forex trading. Why can't Forex trading be done under the umbrella of the exchange? We are currently benchmarking on Jamaica. Jamaica has 129 listed companies. You know why they have 129 listed companies in a population of 1 million people with a diaspora of 5 million Jamaicans? Total population of Jamaicans in the world is 6 million. 1 million in the country, 5 outside.
Yeah.
And 129 listed companies. Kenya with 50 million plus people with 62 companies, right? With no listings in the last 13 years until last month. So the reason is that one of the incentives that they gave in Jamaica is that if you list your company, then you have a 100% corporate tax waiver for 5 years. After 5 years, between 5 and 10 years, you have 50%. So why not list?
Of course.
So you can do your Forex trading on the market listed if we give you the incentives that you need.
Okay, I like that. Quick one. Did the Nairobi Securities Exchange recover from COVID as well as expected, and globally compared to other global securities exchange? How was our recovery?
Tremendous. I would use just one word. Remarkable, tremendous. And last year we gave the highest dollarized return on investment in Africa. We were number 1 according to the Morgan Stanley index.
Okay.
And the positive results of the NSE are not accidental. They are out of deliberate efforts to transform this market, to make it viable. We have when Mr. Odundo left the exchange a year and a half or 2 ago, I asked my board. I said we are in uncertain, unpredictable times, and it cannot be business as usual. If we think that the exchange will succeed on the basis of the levies it charges for trading bonds or equities, the future speaks a different story to me. So we need to find somebody from outside the industry who will lead a new strategy. We have a new strategy, the exchange. It has 9 pillars, and we are doing quite well on that. We want to see 50 new listings. We've seen 3 in the last 1 month. We'll probably have 3 or 4 before the year ends. We want to have 9 million retail investors. We want to bring in 50 index funds. We want to have a turnover of 3 billion shillings in the next 3 years, of which 60% should be from non-trading activities. We want to diversify our portfolio to include even digital assets and ways of raising money for even small and medium-sized enterprises. We would like to attract retail investors. We have a whole host of new strategic initiatives that will ensure that we are a viable enterprise in the near future. And my encouragement to anybody who is listening to me today is this is the best time to buy shares in the exchange. Because we are not sitting on our laurels. We're working hard to make sure. And I finished my term at the next AGM in June. And I'd like to finish on a high note as I did with the Chamber of Commerce.
I like that. How many of the NSE listed firms in Kenya are banks or financial institutions of a sort?
Well, I don't have the number offhand, but that you can find that on our website. But then the financial sector, the banking sector, has done exceptionally well over the years, and we're trying to see if we can bring in many more counters also to try and
that was my question. Then is there a worry that that the financial sector is kind of carrying the securities exchange? You
see, the thing is this: I see a change in that narrative in the near future, because one of the things that I talked about earlier is when you have a very high debt to GDP ratio by governments, then it forces the government to go to the markets to borrow. And that way it pushes interest rates up. So when the government goes up and floats a bond at 18%, like I said earlier, what motivation would there be for banks? So they start to make huge paper profits, because they'll then take your deposit, pay you 10% or 12%, give it to the government at 18, tax-free, so they make 6%. as a spread. So if they have 100 billion shillings, they're making 6%. They make 6 billion bob doing zilch. So you see, I think now when banks, when interest rates go down, then banks go back into the business of banking.
Yeah.
And by banks going into the business of banking, the risks are higher, the competition is higher, and you see interest rates to the general business community are lower. Their viability there is enhanced, so they're able to charge interest to corporates as opposed to government.
Right.
So
just before, I know there's just a question on, I know this may not be your purview as chair, but Peter Getau had spoken of being a trader a while ago, getting frustrated when he would give a sell order, and the instructions would be actioned 3 days later, making losses as shares can be volatile. Anything that you can speak to towards, making the securities exchange as seamless, as quick as possible?
I wonder when he was trading, because we fixed that 2 years ago.
Okay.
Yeah, we are now on a T+1. We are on a T+1 regime. T+1 means trading +1.
Okay.
So if you trade today, the latest you'll get your money is tomorrow. So tell him to come back. We fixed that 2 years ago.
Okay. Tell him the experience will be new. I'm curious, you may have spoken to it, but how do you ensure NSE remains competitive against other regional exchanges like Rwanda, Nigeria?
We've outcompeted them already a long time ago. I think I spoke to that already. We have a new strategic focus, and in 2 years' time, we aim to have 60% of our turnover from non-trading activities. You see, right now we are heavily reliant on the levies, and you see, if we broaden our service offerings, if we broaden the things that we do, draw money. I mean, earning money from more sources of more services that we can offer. You see, one thing I want to remind you is that more than anything else, the NSE is an efficient financial infrastructure that enables trades to take place of bonds and equities. So you see, the efficiency of that system is, I mean, we have almost zero. We have 99.9% uptime. In the entire duration that I've been on the board of the NSE, I think we've only had 2 glitches. And that, I'm speaking that deliberately in an era where cybersecurity is a huge problem. I'm sure even for your Nation Media Group, I was just, I sit on many boards. I sit on boards of technology companies. I sit on boards of a media company. I can tell you, I know, for example, one of our leading banks in Kenya has about 1.4 million cyber attacks per month. So if we've had only 2 glitches, and one was in COVID, when we had human resource challenges because people were not working from in situ. I mean, I think the robustness of our infrastructure will ensure that we remain viable into the future.
It speaks for itself. Someone is asking if there's an NSE app. Yeah, actually, yes. Is there an NSE app? I think we're just trying to make it, as accessible as possible. Okay,
there is one that we're working on now to create a single window, single entry into the market seamlessly.
Okay.
And I'm extremely proud of what Safaricom has done with M-Pesa. And I think even globally, I mean, it's not a surprise that whole technology has been the subject of case studies in Harvard, in Stanford, and in the bastions of higher education globally. We would want to create a single entry platform that will also facilitate for the retail trades that I talked about earlier. We would like it to be as transparent, seamless, and easy to use as possible. Right now, there are a few platforms that have been developed by partners, organizations. There's one called NSE Easy. We know we are working in great collaboration with our investment bankers to see also that we create maybe a 2, maximum 3-step process where you can access the market through your mobile phone. If M-Pesa can do it on 1/3 of our GDP and export the service, I see no reason why we can't use the brilliant human resource complement that we have in this country to develop that sort of an access.
I just asked a relative, are you investing in the Nairobi Securities Exchange? Why not? They said we have a few shares in some counters like banks and Safaricom. The prices haven't been good, so dividends are not attractive. So we've halted until the market is more attractive.
Sorry to say, but they are not informed. And I hope they're watching this
They are
show.
watching.
Because
It's not personal.
Safaricom was 14 shillings last year. It's 25 this year. It has a 40% upside. So, I mean, where they derive their information, I don't know.
So how are all these people? Where's the gap in terms of the information?
It's a lot of, someone else is speaking to the fact
I haven't been on TV much lately, but
our economy, just 1 sec. Our economy should be measured by how the bottom 30% are doing in the supermarket, not how the top 1% are doing in the stock. It's kind of, it speaks again to this sort of dissonance between the macros and the micros. And I know you're speaking specifically to how well the stock exchange is doing, but there's still a dissonance somewhere. Yes, but please continue.
I couldn't agree with you more. I mean, there's a huge need for public education, investor education. There's a huge need to bridge the information asymmetry gap. That is a responsibility for not just ourselves as the exchange, but for a broader stakeholding group, including the media. And I intend also to engage the Media Owners Association soon. I was the chairman of that association a few years back. We intend to work closely with FSD. We intend to work closely with the Capital Markets Authority. We intend to work closely with the National Treasury. We intend to work closely with the Kenya Association of Stockbrokers and Investment Bankers. There is another group as well called the Pack Hunters Club, which is chaired by Dr. Kili, who was here before me. And that brings together all the stakeholding groups. That's the pension fund industry, the NSC, the CMA, the Treasury, the Retirement Benefits Authority, all the stakeholding groups. And we realized that in order for us to move to a new epoch of financial success as a country, we need to bridge the information asymmetry gap. It is not lost to us, and you will see a lot more activity. And I don't intend to be quiet. I intend to use the next year of my tour of duty, going around and crusading for this.
Shouting as much as possible. I want to ask the question about this middleman called a stockbroker.
Yes.
Must I go through a stockbroker?
Right.
I mean, even you're a farmer.
Investment fund.
You don't like dealing with brokers. You want to go.
Nobody likes a
from
middleman.
straight to market.
Let me say first and foremost that the industry, the exchange itself was created by investment banks. So I don't think even the word broker gives them, it does justice to that industry. I mean, they were called stockbrokers before, but they are called investment banks today. And I think that they do not just take a commission for the services they do. Of course, they do take a commission, but then there's a lot more services they do. They are behind the research that you, as an investor, will receive. They are also involved in lobbying activity to ensure that we have an ecosystem that supports growth of capital markets. You see, we are a listed company. Listed companies are bound by so many rules and regulations. So to me, I consider the investment bank as a critical cog in the wheel in what we are doing. And they offer a lot more than just charge the levy.
So they're not just an intermediary that comes in here to...
No.
They have a role to play.
They have a significant
I'm asking that because I'm coming back to Janet and her relatives. These are the ones who should be informing the traders, especially the retail traders, how the market is doing. Right? That, it's... And I hear when you say that your dream is to see traders actually trading, not just buying shares and doing like our parents and grandparents, keeping the share certificate and waiting for the dividend, whether it's 20 bob or 200 bob, but actively participating. That should be let's call them the investment bankers who are encouraging me to do that by giving me more information and showing me these are good time to sell or to buy.
Yeah, as you know, we've had a bear run for many years. In fact, the bull run that we are experiencing today has only been on for the last maybe a year. So the fortunes of investment banks are pegged very much to market performance and really the well-being of the exchange. The Capital Markets Authority also requires that investment bankers make public their financials as they do for listed companies. So any observer in the industry would note that in the last few years, majority of these investment banks have been in the red. They have been in loss-making territory. And credit goes to them for being, I don't think we've seen any fold in the recent past, despite the very difficult market circumstances that they have faced. So for me, I would say this is a time that they will start to see an upswing. When the market performs well, all boats rise. The investment bankers will do better. The exchange will do better. The CDSC Corporation, which is the registry, will do better. The Capital Markets Authority will collect more levies. The economic activity that is created around the capital markets will benefit all the participants in this ecosystem. So I think for me, we are going to see, I'm confident because I work closely with the investment banking community through the vice chair of the NSC, who is Donald Wangunyu, who serves as my deputy. You will see a lot more activity coming from their end. And even this, in the last year, despite their difficulties, they've had roadshows across Nairobi in terms of investor education.
Right. I'm thinking, and I know, government is a critical cog in the wheel for any economy, but I am wondering if there is such a thing as too much government. And maybe you can use global best practice and best case scenarios elsewhere, and also the opposite, perhaps, because if again pension monies are invested into infrastructure bonds or things that are government related, and then again we're buying government securities on the stock exchange, it's almost seems a bit like the mesh is it's a quagmire. It's too much. Is there such a thing? Is there such a thing?
I thought so at the onset. Actually, in 2020, when I joined the exchange, I actually had this exact same opinion. But with the benefit of hindsight and with the knowledge that I have gained by this job that I am doing, I realized that the government is a key arbiter in this environment. And we traveled to Euronext, which is the largest exchange in France, based in France, that covers Europe. And many of the listed entities in Euronext are actually former utilities in that continent. The utilities in Kenya would include Kenya Power, the water companies, and etc. And the government and the private sectors in those countries, in their wisdom, decided to list those entities. What did that do? One, it enhanced transparency. It improved efficiency. It improved corporate governance. It reduced corruption. It improved returns, and it gave the public a chance to participate in their utilities. One of the utilities that I would say would be perfectly suited for listing is Nairobi Water Company. I mean, I'm not here to besmirch anybody, but I mean, I'm sure you've experienced a situation where they come to your house and say, "Unataka connect kitu kidogo."
It's odd because they were here and they said, I mean, why can't we get a little bit of this, investment? And
so you see the advantages and the benefits that derive from listing are multiple. And I can just cite some examples. I mean, in Kenya, for example, many of our leading stocks were previously government-owned entities. KCB, which listed in 1988, was worth 9 billion shillings. Is today worth, I can't remember the last figure, I think it's 130 or much more than that. Kengen, which listed thereafter. Kengen has been able to have one of the best performing balance sheets across Africa. The company has been able to even become not just a Kenyan corporate, but is today, vending its business in many jurisdictions as KCB is. So even Kenya Pipeline, Kenya Pipeline has done very well, but I can assure you, and I can say this with no fear of contradiction, there will be better performance from Kenya Pipeline when it becomes listed, because then it also is subjected to less political interference. The recruitment to their boards, recruitment to their C-suite will be competitive. It'll be through processes that are governed by the Capital Markets Authority, and you will see that the listing of these state-owned enterprises will lead to the all boats rising. Now, the government is a necessary participant because they own many enterprises that are listable. The government is a necessary participant because they also control the tax ecosystem and the market conditions of how business is conducted. So you see, I think there's nothing like too much government in terms of capital markets because they are front and they are center.
But same way, banks are choosing to lend to government as opposed to lending to the private market. Could we see a similar-ish crowding out of other private sector players by government in the stock exchange?
Yes and no, because one is that when government lists its own enterprises in the exchange, is that more government or less government?
It's less government.
Yeah. And then
It's less government, but with government. I don't know. It's
number two, we committed with our government when they first visit of our head of state that for every listing that they give us, we will get them a private sector listing. In the last 1 month, you've noted we've had 2 listings, not including the FinCo. We've had 2 equity listings on the exchange after 13 years of drought. Now, we have a pipeline right now of up to 10 listed companies that want to list. I will not, I think you saw it recently that Family Bank announced that they will list next year. We're in active discussion with them. We're in active discussion with many private sector companies. So they say it takes 2 hands to clap.
Okay.
So we want the government to give us 1 company, we give them another company.
Okay.
And we
To even it out.
It says you rub 2 coins together and produce a 3rd one.
You've probably spoken to this, but how is the NSE integrating blockchain, for example? I think you said strategically there's a push. So just number one, either to modernize or just to integrate blockchain, AI. What are those plans?
Very good question. Our technology subcommittee, you know, the NSE, being a listed company, operates on the highest standard of corporate governance. We have committees. We have the most hardworking board that I've ever been interacted with. In fact, I think the last 5 years of being in the NSE has been a really enlightening time for me because I've served in many boards. But then you see the scrupulousness of the engagement, the amount of work that is done there is not to be gainsaid. Because you see, also you remember that as a director of a listed company, your nose has to be completely clean. Our technology committee is looking at that, and as you know, as I said in the beginning, and I emphasize again, we are nothing more than a financial, technological infrastructure that enables trading. So you see, in the middle of our activity is a technological advancement. So you see, what you just talked about, blockchain, and embracing digital assets. Of course, that is in the ambit of the Central Bank of Kenya and the CMA and the Communications Authority. Those are all the regulatory agencies. But we are actively pushing that we are working with the rest of the world in terms of embracing these new technologies. And
then you also, I think about organizations or companies doing good, doing well, but also doing good. And I was just saying during the break, I remember my only interaction with NSE was when they do this thing called the Celebrity Securities Exchange, and you go there and you're with her. But you ring the bell. It felt so empowering. I wish I knew all this. I went in there I had one ask, so beyond ringing the bell. And I remember that time it was raising funds towards conservation efforts. So just speaking to how else is NSE also looking at uplifting communities? Is it limited to conservation? Are there other communities that you feel need empowerment?
Excellent question. I'll start by saying that have you encountered the expression, the terminology ESG? ESG stands
it's the buzzword now. In the
yes.
The new CSR.
So ESG, first and foremost, we as the NSE, we are at the front and center in leading the campaign for companies to embrace ESG. Because the world that we live in today is not sustainable unless we do something to be able to bequeath it to generations to come. So one of the things that we have done is that we are working towards making it mandatory for all listed companies to produce a sustainability report. It is called the triple bottom line reports, meaning that when people would assess a company, they would want to see what they're doing in terms of ESG, what they're doing for the environment, what they're doing for the social, and what they're doing on governance. So those 3 aspects are absolutely crucial. We've even passed this on to our Booker program that covers the burgeoning companies that are looking or aspiring to list in the future, or many of whom are just working to improve their own companies. In the businesses that I own, I've also been a great ambassador for that, ensuring that companies are well governed, ensuring that we are dealing with the social aspects of it, and ensuring that whatever it is that you can do, whether it is engaging in the circular economy to see that you can recycle things or whatever it is that you can do, plant trees, you name it, that at least you are accountable to some activity that works, that leads to a sustainable environment. Personally, I have a pet project. I think that I believe that art can form a new asset class, and it is my hope that before I leave the exchange, that we will be able to do a biannual event where we bring artists and we bring corporates, so we can allow the artists who are developing, be it sculptors, be it fine artists, to bring their products to market.
Really good.
And we would also want to encourage the banks to collateralize art, so that if you're the high net worth individual can even collect art and, collateralize it, use it to borrow money. We just need, all civilized societies. Art is an integral aspect of it.
It really
that's
is.
smart. Yeah.
You've spoken to the future with the upcoming IPOs.
Yes.
The drought was long.
Yeah.
Why? What was happening there?
Why
And-
13 years?
Yeah, and what's changed? What's changing now? And why the long drought? You've spoken to the things that have changed for sure, but maybe more so with the upcoming IPOs, why now and why the long drought? Yeah.
I wouldn't want to speak about anything that happened before my time in the exchange, because I'm not competent to do so. Neither am I informed sufficiently to speak on national TV on that. But I would just be able to speak on what is within my purview. I think it's deliberate, concerted, focused effort. I think it is the ability to craft strategy that speaks to the needs of the time. It is the dogged and persistent pursuit of the objectives that you set out, which we have done without failure. And finally, it is the engagement with multiple stakeholders who have a common vision.
Okay.
I want to talk about financial literacy, and where it's basically just people understanding money and understanding investing. Like you've said, and you remember your own parents, grandparents, taking a lot of pride in the fact that they own a share. They have a share in one of the commercial banks, they have a share in one of the agriculture companies, and so on and so forth. But they kept the share certificates and they were just holding on to them. And then since then, we are not seeing the same happening with the younger generation. One of the things that you've said is you want, in your ambitious program, is to have at least 9 million new retail investors joining the market. That will have to come with a lot of awareness and education. What's the strategy for that? Do you see going to school, to start at school level, talking to students in high school on understanding markets and investing and trading, and then the current population that is in colleges and universities and up?
How do we make the NSC cool again?
On that, I mentioned to you that we're working with the multiple other stakeholders towards creating a budget for stakeholder engagement. We have also been able to identify brand ambassadors amongst the youth. And in the Gen Z, we have quite a number of brand ambassadors. We are also having social engagements with them, where we have activities like the one that you attended, the Market Day, the NSC Market Day. We've also been able to do investor education roadshows, and also just by people like myself who are the leaders of the industry coming to TV to speak to them. I think there are quite a lot of initiatives that are ongoing. However, I think the most crucial would be, one of the things we are trying to do is to gamify trading.
Yeah.
So we've already developed a gaming app that we are taking to schools, and we are showing people how they can participate in trading activity. If the number of Kenyans that you know are involved in betting every day, I see no reason why we cannot switch.
That's your winner chicken dinner. Gamifying trading.
Gamifying
Because
trading, it's
essentially
smart.
already is.
Yes.
Yeah. It's and not to diminish the seriousness, but it has game aspects. So why not,
And I've seen the difference gamifying. Like just looking at my sons, you can say everything, then it's gamified and translated. I'm like, so everything I said
nothing
made more
landed.
sense when it was gamified. We're winding up. I know your world is coming up. We'll let you know just now if we get information on what's coming up next, and also Vibe Shift with Claudia Naisaba, Brian Aseli, Your World with Winnie and Mwikali. But this has been hugely helpful, I think, today, between pensions and investing. See, I think we can do better, yeah? Yeah? Okay.
Yeah, we can. Let's have a look at
and processing.
actually what's happening on your world.
Yeah.
There's the ladies, that's Mwikali, and of course Winnie will be hosting several people, including Eric Obwaka, who is a tech expert, and Mutua Mutuku Wakili Apo, who we've not hosted him here, but we have hosted him a few times. Good Wakili there. Swale Biggie, who is a social media influencer, and Miriam Mwangi, who's a relationship coach. And they're talking about, should partners have the right to check each other's phones? Spicy. And they've got a wakili in place so that we can get the legal.
It's very spicy for a 10 a.m.
It's very spicy for 10. I like it. Thank you so much for spending the morning with us. We'll be back here tomorrow, 6 to 10 a.m. to Fix the Nation on Nation FM, on NTV, on YouTube, on Instagram, on X. A big thank you, of course, to Kiprono Kittony, who is the chair of the NSC board, and of course to Jose Akili as well. Daktari Pia. We've had an amazing show. Tupatane kesho 6 to 10 a.m.
9:30 tonight, Eric Latif. Last
Only
word.
Leo.
It's tonight.
Yes.
Please catch him and everybody else on the last word as well.
Yes.
Sawa. Thank you.